what do you make of the financial sector stress that is likely to come up because of the pandemic? And if I were to just club this question with another one, and that is, how do you think the RBI's recent loan recast scheme is going to play out with the troubled businesses because of this pandemic?
No, bad loans or the non-performing loans are about 10% today. So my sense is it will double to 20%. The retail loans, the I think non-performing part is only 2-3% today. That
Mhm,
might go
mhm.
up to about 15 odd percent. Right, that's a very large jump.
Okay.
The industrial loans may also see doubling. So non-performing loans might actually be more than total non-performing loans might actually go more than twice of the existing. The restructuring would take place. Restructuring is not a great policy. And also the fact that the Reserve Bank is allowing the restructured loans to be treated as standard loans. They're not really standard
Mhm,
loans. And especially of those companies whose underlying businesses have got very adversely affected, they are not going to be in a position to pay this. So if you restructure their loans and call
correct.
them standard
Mhm,
loans, it will be only
mhm,
in a way pushing the can down the road or pushing the ugly part of the loan book under the carpet. So this will
mhm,
provide some temporary cover up to the hopeless situation which we
mhm,
have on the loans and credit part, but this is not going to be a long-term solution. Only for that segment of
mhm,
industry which suffered temporary loss on account of COVID and
mhm,
are able to get their businesses back, and maybe 6 months down the line or 1 year down the line, they would be
mhm,
healthy enough to service. For that, the restructuring part would be doing a right kind of thing, a good thing. But that is a smaller. That's not a. That may be a 50% part of the book, but not more than that. So I see tough days ahead on the financial side. There would be a lot of stress in the banks, especially the public sector banks. You have seen the private sector banks not being that much adversely affected. Even moratorium was much less applied by their borrowers than others. And private banks have also been able to raise a lot of capital. So something like 50 odd thousand, 50 to 60,000 crores has been raised by the private banks. But public sector banks, which have large stress and bigger portion of the non-performing loans, they are by not recognizing, and somehow for the time being, since the government bonds rate came down, they had treasury profits. So some of the sick
mhm.
public sector banks have been able to report profit for the first quarter, but
Correct.
that's not a real profit. There is
Correct.
that is structural kind of made up profit, not the real profit. And they are also not in a position to raise capital from the market, and
Mhm,
therefore their stress would probably go
mhm,
and lie at the door of the government, and the
mhm,
government they have to, and they are the government itself is so fiscally stressed at this moment that they
mhm,
are perhaps not in a position to provide any more capital, and
mhm.
therefore public sector bank seems to be got into a trap where they don't find where they can raise the required capital. So tough days for them.
So how do you deal with such a huge books of bad loans?
See, the only right way to deal with bad loans is that if that bad loan can be, or that, you see, loans are all given to some enterprise.
Mhm,
Loans need not and should not be viewed as a separate thing. It's so linked to the health and the profitability and the ability of the underlying business which has the loan, right?
mhm,
So to to resolve the loans or to deal with the loans,
Mhm.
you need to
Mhm.
deal with the business.
Correct.
And there is the most correct way, in my judgment, to deal with that
Mhm.
business is that if that business can be revived, restructured, resolved by the existing entrepreneur or by someone else, right?
Mhm.
That
Mhm.
is what should be attempted. The best
Mhm.
way to do that is if the existing entrepreneurs
Mhm.
can revive. Either they have suffered because of temporary reasons like
Mhm.
COVID, etc., or
Mhm.
they have or their business, basic business is sound. Then the
Mhm.
restructuring of such businesses or their loans
Mhm.
can help them. But
Correct.
those businesses which cannot be sort of revived or put onto the healthier course by the
Mhm.
existing management, or the existing management and the promoters are actually the partakers in that business becoming sort of unviable.
Mhm.
The right way is to take it to the IBC
Mhm.
and sell it to somebody who can manage it better, who can turn it around better. We have seen such good resolutions happening under the IBC so far in
Mhm.
last years. So that is the
Mhm.
way. So I don't think this was a good move on the part of the government to suspend
Suspend.
the IBC wholesale.
Mhm.
IBC should not have been suspended for
Mhm.
these businesses where the underlying business cannot be revived or
Mhm.
cannot be made to bring to the profit by the existing so the bank should have had the discretion. Bank
Mhm.
should have had the ability to
Mhm.
decide to take whichever company they
Mhm.
thought is best resolved through the IBC. By cutting off
Correct.
that means, we have
Mhm.
actually constrain the bank's ability to resolve their loans. And the last segment of the loans where it is a total loss, the business is gone, either
Mhm.
because the COVID-19 or because of any other reasons. There is no
Mhm.
point in restructuring such loans. They should
Mhm.
be simply sold off or liquidated, these businesses, and the bank should recognize and take the hit on that. So this three-way resolution should have been, to my mind, the policy for getting this resolved, rather than sort of having one method only of sort of restructuring and then putting them as structure and as standard.